All right. So today is April 18th and 2023, and I'm doing a recap. I haven't done a recap in a very long time, at least one that I'm sharing on YouTube. I'm tempted to see. This is actually probably a good show. Anyway, it doesn't matter. We'll talk about the recap first. Um, all right. So I'm just going to recap today. I'm going to show my trades, and I don't know. I stopped doing the YouTube thing, and I should do more. It's because I don't know if it helps or I'm just journaling these days. I find myself doing more of this stuff and writing out, like, doing more of this stuff than anything else. And I really should um, journal more. I'm not journal, sorry. I really should do some more YouTube. Um, but if I get some feedback, that would be helpful. But I don't really get much in terms of people saying much, so I just don't really bother so much. But some people tell me that it helps. Some people like to hear it. So if anyone has anything they want to say, so be it. All right. Anyway, so today I took a really good short on MNQ and MES today, and I started increasing my trade size because the volatility has reduced a lot. In fact, yesterday I traded minis as opposed to micros. Today I decided to just trade micros. Um, the reason for that was just because of where we were opening. Um, but anyway, let's start off with what was going on and what's been happening. So this is the electronic trading hour chart for the ES, and we've kind of channeled down over the whole of last year, and then kind of gone into. I think this is a two-legged correction. Um, you know, but anyway, it doesn't really matter. If it's a two-legged correction, we're going down, um, and we probably are. I mean, there's probably this level to test still. But anyway, that's by the by. That has no bearing on what's happening today right now. Anyway, so we've been in this trading range, and I marked over here the trading range, marked out the bull channel. We had a three push pattern over here, and then instead of failing this way, we are going the opposite way. And in fact, usually when that happens, sometimes we go for a measured move the size of this, or maybe this, or something like that. So it's no surprise we had this breakout. About 3 4 days we had with a nice rally, and then we started to overlap and go sideways into the trading range. For me, I think this area is a breakout test of this area. And then you had a high one here and a double bottom. I think on this moving average, this I believe is the 9 exponential moving average, 9 bar period. So you have a double bottom around here. Didn't actually test the 20, and then we now had this breakout, a pullback here, and then we've kind of slightly been going higher. But every time we go higher, we are finding sellers, and the bars are still overlapping. However, they're making higher highs and higher lows. Whenever you find the market doing something like this, then the market is in a broad channel. However, it's still making higher highs and higher lows. Um, coming into the market this morning, we opened up at the top here and we had a wedge. And normally when you have three pushes like this, usually there's some profit taking here. There's a possibility of a little sell-off. But however, as I said, we're in a tight, not tight. Actually, this is a bit tight bull channel. So the way I like to trade this, at least from my understanding, is whenever you see the market doing this with lots of overlapping bars, don't bet on breakouts, especially when you start to see tails below them. Don't bet on breakouts. Just trade. Just know you're going to get overlaps throughout the entire day. So depending on where you open, you can kind of get an idea of what the market is, where the market is going to go, and where it's going to find support and resistance, right? And that's usually the trick. Here, when you see the market doing this, it's closing on top of the bars and closing on top of each other. It's a buy the close setup, and therefore expect the market to keep going higher. Maybe form a little tail at the bottom, but still go higher. So here we had an attempt to break out, did not take out this high, and therefore it pulled back, and then went up, well, went higher and then pulled back, right? So the fact that we have some sellers here meant that we'll probably get some disappointment up here, and then we tried again, and then obviously another high. So traders are selling these highs. So the selling pressure coming into the market is already beginning to cause prices to shift more towards the center, right? So that, bearing that in mind, because we opened around the high of this particular candle, there was a chance that we were going to come back down at least at the bottom of the trend line or the channel. As you can see, we didn't actually do that today, but we're going to talk about what happened. Anyway, so that was my thesis coming into the day. The fact that I could see that we were let's actually just move this. This is a 6,000 tick chart. So this was the open of the day. If I take off, there we go. Still a few lines. I don't think I need these lines anymore. It doesn't really matter. All right. Anyway, the reason why I use the tick chart whenever I'm planning the day, because I use the 5 minute to enter trades, but the tick chart gives me sort of an idea of conviction. So you can imagine the day prior to the open was like this, right? So this is yesterday's price action. This is the Globex session, and here's the Globex session again. I prefer the tick chart over the time-based chart because it's consistent with what's happening over in this section. I'm just gonna use a pointer so you can see what's happening here is consistent here. However, in a time-based chart, the transaction, the volume is so low that the patterns lose form relative to the day session. So it's hard to see really what really is going on, at least from what the market makers are doing. So that's why I like to use that. However, I use the 5 minute day chart to just kind of see the setups a lot clearer. All right, so we have, as you can see, we've had a very strong push up, pullback, a second pullback here, but it's a higher low. So this is a double bottom. So chances are we're gonna have a second leg up. Let me see if we had. It wasn't exactly. I was gonna do a second two-legged one. No, it's clearly not. Still a lot of room. Anyway, it doesn't matter. So we had a second leg up. However, you can see we've had 3 pushes, 1, 2, 3, which is why I marked it like that. So we're in a wedge. And if you notice here, we had so much selling over here, trying to test this low before we went higher. A lot of selling pressure. So of course, you're expecting a lot of selling pressure to come in over here today. Usually we get 2 legs down, so 1, 2, another 1, 2. So you expect the same here. If we got a sell-off, which we did, and then a second one. All right, so we opened here, right? And what's really interesting is the fact that once we had this really big rally, right, you have 3 attempts to reverse. So this is the first, second, and then finally here's the third. And you can kind of see that there's a lot of buying pressure. I mean, this looks like a trap, but a lot of buying pressure. You see this here on the third push. You're expecting to sell the next push. Oops. So even still in the Globex session, we're still getting a really nice sell signal bar. So one could go short at the open, right? All right. So anyway, so that's what we had coming in today. And as I said, I had a should I just say I had a bit of a bear bias as a result of that. This is a 20,000 tick chart. I use this really just to see the whole sort of thing from a larger perspective. The bars are a lot bigger. Each bar is 20,000 ticks. And as you can see, you can kind of read the price action a lot cleaner. Now, this is the other thing. Because it's a trading range, in trading ranges, we tend to, let me just take these lines off again. We tend to close gaps. So say for instance now we have this sell here and we have a gap between this bar and this. I know that this gap is going to close, right? And this gap is going to close. So price will rally all the way back up here. But now you have a big gap here and then price to this point. So this gap between here and where the price is will close. Now we have a gap between this low and where price is, and that will close. A gap down here and where price is, that will close, and so on and so forth. So we have a gap here between the last place where the bear sold aggressively and where we are. So there is a chance that we're going to close this gap. As a result, you can see a bull bar presents itself. So that was the plan for me today, to sell this high, because again we're at the top of the range. Just put this back up, to sell this high and target this gap, because it is a trading range, right? It's trading range price action. Okay, yes, it's a broad channel, a bull channel, but it's two-sided. So bears are making money and bulls are making money at the same time. So it makes sense to target this level. Maybe we might pull back for a second leg down. That was the plan, to short here, get out around here. All right, let's move in to the and here we go. Let's see now. So that gap was here, right? So this area here, close to the high. So this bar, this is the 15-minute chart. So I'm going to switch to the 5-minute, and we can talk through what we did, and I'll show my trades. All right, so this is a 5-minute chart. Now, as I said, I traded ES and MNQ together. There's the MNQ chart. That's the ES chart. That's also the ES chart. Oh no. Okay, doesn't matter. I'll just put MNQ here. Alright, so I'll pull this to the side and we'll go to the ES first. Alright, so the market opened first of all with a bear bar. And as you can see, after the bear bar, we had a pullback, a little micro wedge, right? A higher high, and then we created a double top with a beautiful sell signal over here, and you could go short below there. The purple dot is a dot that tells me that it's 10 o'clock and we're going to get a news report, and therefore you're probably going to get a lot of volatility on this bar. And literally this is the bar that filled that gap. So if you, where's that gap? Oh no, it wasn't this gap. The gap happened on, sorry, I'm just looking at, alright, so the gap is here. It's just, it happened in the overnight session on this day. So we had a, this is the previous day, the previous session, and we had a drop down to the moving average, a pullback, and then all this over here. So this is where the gap was, and that was where I was targeting. Anyway, so we have such a big strong up. I can imagine, because this is so strong, V reversals are very, very uncommon, so I don't expect price to come all the way down here and test this low, especially since we're in a bull channel. We will probably come back up before we go for a second leg down. So anyway, so I was targeting this level here, and I'll talk through. I mean, it seems very straightforward, right? Straightforward trade, but how I managed it is what's key. Okay, so this was, let's do it this way. These were my entries. So I entered the first bar really early, and the reason why I did that was because I was also watching the 6K chart, and the first bar, let's just put the cursor back on so it's in sync. Alright, so once this bar had broken, I think I just made up my mind. I was like, this is about to close, and it looks like it's going to be a strong bear bar. And I entered there. Now, I think I actually entered on MNQ before I entered on ES. This is MNQ. Yes, I did. So I entered really early on MNQ. This was a lot more, this was still somewhat bullish. I just entered anyway. Still, as you can see, we opened here, came down, went back up. This went up first and then came down. Then I entered here, entered a few contracts, added some more down here, and then added more and added. I think I got carried away with my adding because my stop was a bit high. But as we were pulling back and I noticed this bar was so big, I added one more here and I started to get really nervous. So I think I lost money on some of my contracts because I scaled out. I pulled my average price a bit higher and I scaled out some over there. I think I was in with about 10 micros, just based on the fact that I don't want to, if I'm going to target so far, what if it bounces? And I just didn't want to risk it. It's happened before where I've mismanaged a trade, and whilst I didn't lose that much money. I think it was very, very little. My emotions were rattled by the fact that I was up quite a bit and let it go. So in because of that, I'd rather sort of, you know reduce the size, put the stop where it needs to be, and then just swing it. Today was more of a scalper's day than a swing day, because I would have held for the whole swing, but I was really tired and I had some other things to do. All right, anyway, so looking at this was what I think I'm going to do, actually, just to make this easier so you can see both charts. So we'll put this chart here, and then put this chart here. All right, so we have two charts here. All right. All right, so what I did was I went in with a few, kept on adding, and as we went higher, I added, and then added a bit more. And the reason for me adding is just because, I'm still confident we're going lower. Um, why am I confident that we're going lower, and why didn't I think we would just start rally strongly? A lot of it has to do with what's happened over here. If we rallied so strongly, then it would be a climax, and therefore there is a big chance that we would reverse as well. But it was just the fact that we had started the trend all the way down here. I thought the bulls were running out of steam, especially when I had looked on the ETA chart with all those bear bars. It was just unlikely that you were going to get more bulls buying. We're so far above the moving average. It's such a magnet whenever you gap up like this that no one is going to want to buy so high. So that was what gave me more conviction to just keep selling. I sold again, reduced my risk, took some off, and then held some of this. And then when we got to the 9 MA, at this point, because of the presence of these bull bars, I decided to take a whole chunk out and then leave, I think, one or two contracts in left. Um, and then when we got to the 20, I think I took some out. Then I don't know why I sold some more here. I think at this point I was having FOMO, and then I just remember that, oh, we still have that gap. I should have just marked the gap. But the high was really the target for me because I thought, okay, we could bounce over here and find some buyers. Let me just get out over here. Then I saw this bar. I thought, okay, this could be a bull trap because if this is a pullback and we're going to go higher, I mean, not that we're going to break this high, but we could pull back again. It's happened before. Let me just show you an example where that happened, and I got a bit cocky on that day. I learned a lesson. Here we go. This was the day. We pull back so strongly, and then we pull back again. We went all the way up. I mean, even though we eventually went down, but I lost everything I made here because of this pullback. So ever since then, if I'm scalping with that sort of position, I don't. I just don't test fate. I just decide, okay, do you know what? We've reached the target. Get out. If it comes down again, we can sell more. We formed a series of inside bars over here, and this was a great sell. I was talking to a few friends at the time. I think I said to them, "I'm done already," and because I'd already said that, I couldn't take this short. But when this bar closed, this bar just shot down so quickly, and I wish I had a limit order, not a stop order sell here, because look at the risk would have just been up here or up here. It's just really small compared to look at how much you're getting. So I missed that. And at this point, I was already done. I was tired. We were testing this high, so this was the gap I could have targeted as well from here to here, and then we just chopped around. And once this started to happen, you just knew that the rest of the day was going to be a chop fest. We just literally went sideways like this for the entire day. I got really bored. Okay, no, I wasn't here. I got bored early in the day, and I took a short somewhere. I took a short here somewhere, or I can't remember what I did. No, it was before this. It was before this. I traded one of my accounts and took a short somewhere, but it doesn't matter. Anyway, so the same thesis again, just on MNQ. I did the same thing. Add. I try sometimes trade them both together. I would sell to, and then start to scale out. With MNQ, I was a lot more cautious, reduce risk here again, and then just started to, yeah, scale out here, scaled out some here, bought some more or sold some more here, scaled out here, and I thought, okay, I'm gonna stop. And that was literally my day. Um, yeah, so that was really it. And then I just started to watch what was going on over here. And if we can talk about that actually, um, this side, this part of the market was really interesting. And this is where the tick chart really helps. So you look at this and you're not really sure what's going on, but you have to remember that um, there's so little volume that what is happening over here and what is happening over here are two different things. The bars here do not equate to the bars here. This move here is probably just one bar here. And what I mean by that is the number of transactions happening over this 15-minute period is the same number of transactions that's happening in a 5-minute period here. So it's easy to see this and think you were going down, when in actual fact the volatility is so low that we're getting a lot of sideways price action. This actually answers a question that has something that's been bugging me for a while, which is why are we getting a lot of like so many wedges forming within wedges? What is going on? Why are we getting all this stuff, lots of overlaps? And last year we never got any of it. The price action was really clean. And it just dawned on me when I started to look at the tick chart, because on the tick chart things are a lot cleaner. You get the spike, pullback, wedge, double top, failed breakout here, and then another wedge. You know, it's a lot cleaner. However, here you're getting so much sideways. On the tick, um, not much happens. Like, there's everything is all based on transactions, right? But so much has happened over here based on the time that when you look at the tick chart, not much has happened. Like, look at this sideways here. You only have one, two, three, four, five bars. But on the 5-minute chart, you have almost 10 bars. So little has happened, but it looks like a lot has happened when you look at the 5-minute. So one has to be very, very careful when looking at that, knowing that there's not a lot of volatility, so chances are we're not going to move very far. These trades are the hardest to manage, and I'm so glad I didn't trade anything over here, only just because it's just not clear. It's very, very, very difficult to figure out what's going on. We had a failed breakout by the bears, like a bear trap here, and so we were expecting prices to come back up. It did not happen. And here it looked like we're going to get a breakout to the downside. As I've drawn this over here, it doesn't look like it's happening. It looks like we might come down here and probably go higher. The market has very, very, very little volatility at the moment, and it looks like it's deciding on what direction it wants to go. Um, it kind of reminds me of how the price action looked about 2 years ago when we were in that massive bull rally from the pandemic. But anyway, I'd just share my recap today. It's been a while, and hope everyone is having a good day.